now that you've found that perfect used car that's right just for you, how are you going to pay for it? In this segment, we'll look at the different options you have for paying for your new used car or truck. First of all, it's extremely important that you understand just how important it is to protect your credit rating. The economic structure within the U.S. demands that you have good credit, not only to be able to finance a vehicle, but did you know you can be denied a good job or health or life insurance, or be denied something like a cell phone service with a reliable nationwide company just because your credit rating is poor? And those individuals who do have marginal credit, who do manage to get financing for the vehicle purchase, typically find themselves paying substantially higher interest rates, which means much higher car payments than those people who have good credit. When you wish to purchase a used car that costs quite a bit more than you have cash for, you'll want to finance it. Now, whether or not you decide to finance through your local bank, credit union, or car dealer will depend on how good your credit is. And if, once again, you do your homework by shopping for the best interest rate. Remember, the lower the interest rate on the car loan, the lower your monthly payment. Many dealers can offer you the convenience of one-stop shopping and can offer you competitive interest rates and help you do all the paperwork right there at the same time as when you buy the car. For those customers who have credit that's, let's say, not so great, there are dealers who can offer you what is known as a buy here, pay here option. In other words, the dealer becomes the bank and the customer makes payments directly to the dealer. Now, the customer traditionally pays a higher interest rate for this service. What determines the type of loan you qualify for and the interest rate you receive on your car loan is typically the FICO score or other scoring systems which are called Beacon and Empirica. Now, these credit scores they all use a formula developed by Fair Isaac and Company. It's basically a method of determining the likelihood that credit users are going to pay their bills. Your FICO, Beacon, or Empirica score is typically determined by, for example, late payments, the amount of time credit has been established, the amount of credit used versus the credit available to you, any negative credit information such as bankruptcies, charge-offs, collections, and other negative reports about your credit. Other factors taken into consideration include your income, how long you've worked on your present job, length of time at present residence, and the kind of credit you're requesting. Now, your car dealer, bank, or credit union will most likely use one of the three credit bureaus, Experian, TransUnion, or Equifax, to see which finance rate you qualify for. Know before you buy. Get a free credit report at annualcreditreport.com. Nothing can be as heartbreaking as to find that perfect used car, the one you've been dreaming about, the one you just drove and want to take home, and then being told you don't qualify for financing. So how do you prevent this from happening to your dreams? Well, for starters, pay your bills on time. Don't apply for credit frequently. Reduce your credit card balances. If you have limited credit, obtain additional credit. Your credit information is critical to your future. Protect it and protect your personal identification. Never, and I mean never, share your Social Security number with anyone on a casual basis or over the internet unless it's a secure site. Once an individual has your Social Security number, driver's license number, and your birthday, the doors of chaos are open and are extremely difficult to close. Your bank, credit union, or car dealer can also help you with some of the valuable products that are available to people who finance. For example, gap insurance, which would cover the gap between what's owed on a vehicle and the loan amount, or credit life insurance. Remember, you have choices. And you never have to fill out a credit app before a salesman shows you a vehicle. You don't have to buy credit life or disability insurance. You don't have to buy a warranty or service contract. You've got choices. So don't be pushed into something you feel is not in your best interest.